Welcome back to the Ultimate Trader Workshop. In this video, we're going to be taking a look at this very beautiful advanced bearish Cypher pattern and seeing if it's an opportunity that we want to take. So it is on a macro level. This one is pretty much working off the day/week chart. You can see before we get into the breakdown, we are getting quite the reaction off of it. I do want to say this does kind of go in line with our pound Audi macro, which was the A to B is equal to CD pattern that we allowed to give us a 3-bar reversal before entering. So this was trailing slightly behind it. Good and bad. So you can see the fill on it here. Okay, you can see where that wick came up and filled the Cypher. And let me just jump back real quick. This is a case in where in times past, I would have just entered that as soon as it filled, either that or I would have had a sell limit order. And as you can see, the difference now is I would not have had to go through that squeeze and that drawdown yesterday, which would have pushed maybe about 100 pips during that news event before this gets back on track and starts moving in our direction. So that would have been tough right there. Could have, probably ran into a margin call, or who knows, maybe kind of panicked a little bit and closed the trade, even though my psychology is on a different level at this point. But still, it all depends on, where you are. Can you handle something like that the way that would have sent the account into the negative 100 pips? Although it did come back close bearish still, even that's a big push, but still come back close bearish. And then today's candle, pretty strong bearish candle. The other thing that I would like to say about it is I only want to take A+ setups, meaning having a 3-bar reversal. Well, the trade 3BR, the A+ one, where there's an engulfing candle followed by a doji candle followed by trigger and entry. In this case here, I wouldn't necessarily call that an engulfing candle. If I just come back to the way the chart looks regular, it's not really an engulfing candle. It's just a standard candle, sort of. So it's not an engulfing candle. And then the second candle is not a doji. The second candle is just more of what I would call like an inverted hammer. There's a body here. It's got this long, crazy wick to the top. Upper shadow, super crazy upper shadow, almost no lower shadow. So it's not a doji. And then the trigger and entry. Now that hasn't closed yet. We are an hour and 52 minutes away. We're going to close beyond the doji, right? That's pretty much a given. It's going to be down here somewhere. So the confirmation is there. It's just not the quality that we want. So it's kind of like a pick your poison. I would have to be okay with this if this did not work. I'd have to be perfectly okay with that. Let me show you why. Coming on to the week, right? Coming on to the week, we got basically all of today and all of tomorrow left. Price action could suck back up. This, what is yellow now, tombstone-like, could become a bull candle. We don't know. It was blue at first and it turned yellow because when I go back to the day, you can see the price action that's making it more bearish than bullish. So like I said, a decision has to be made in the form of, I would call a C+ setup. But it's very tempting. But like I said, there's some other things going for it in that I already have a bearish bias because this is pound dollar and I'm already short pound Audi, which is doing very well. It's almost time to add another position to it because we're stacking, we're pyramiding on the other side on pound Audi. I could probably do something like a probe entry here and just seeing what happens if we're able to start getting some profits off of it, and then come on with another larger position. So let's talk targets real quick before we get out of here. Fibonacci retracement from the swing low, which is the C point, up to D, the entry, swing low to swing high. Looking at the 618, you do see structure, a test of structure at the 618, a couple of them actually. It's telling us where price is likely to go. If this is actually a winner, could go even further. Cypher is pretty strong. Like if I brought on 786, go a little bit more. The problem is with the bearish action right here, it's kind of messing up the risk versus reward. Not too much. The Cypher is a pretty strong, efficient pattern. It's one of the best in terms of high probability. The success rate is allegedly somewhere up in the 70 percentile, but I think that all depends on the trader, how they trade it, what type of confirmation that they use. I'm going to be okay with this one. I'm going to go ahead, and if I lose, I'm just going to have to pay the tuition. That's basically when your stop loss gets hit, you're basically just paying the tuition. You're paying the cost to play. It's basically the cost for the lesson, okay? When you jump onto the battlefield, because really that's what's taking place at the battlefield, and you need to be sharp enough with your shot. So that's where all the fine tuning and stuff comes in. So risk versus reward, I'm going to make sure that it's at least 1.25 to 1 so that it makes sense. So I'm going to come a little bit after the 1618 so that I'm not only targeting a 1 to 1, but a 1.25 to 1. So that's what this is looking like. I'm gonna go ahead probably and take the trade. I can't talk myself out of it other than what I saw on the weekly chart. I don't have enough reasons to not take it. Already accepting the risk that if this goes against me, that's my fault, and that's the cost that I'm going to have to pay for not sticking to the rules of engagement and the requirement that we really only want to take A+ setups using a 3-bar reversal, but also understanding that you're not always going to get them when you get your advanced pattern. You have to decide which one is going to trump the other, okay? And then decide at which point are you going to make an exception. And something like this, I'm going to make the exception for it because I do have enough other things going on with it to say, okay, I'll be okay with it regardless of what happens. If he comes against me and takes me out, okay, it's the price you got to pay. And that's what our stop losses are for. Stop losses, the reason your stop losses are there, they're not to shame you. Stop losses is to protect you, if anything, but it's also to say, hey, you know what? Even with all of that stuff, you weren't right this time, and that's okay. So you live to trade another day instead of having your stop too high, way up here, going into too much of a drawdown. You look at the flip side, you win this, you're off to the races, you're doing good. So I should ask that you guys hit the like button at the beginning of this. I don't know how many other times you're going to see something like this, so pretty sure the world could appreciate it. So you hit the like button and give them the gift, or share the video if you know someone that this could help, or if this is something that they can learn something from. Subscribe to the channel if you're not subscribed. Hit the bell icon so you can be notified when the most powerful, most amazing videos in the trading markets are being produced and released like this. You're seeing it right here, free on the house. No gimmicks, no gurus, no fakery, no Lamborghinis, no discords, no paywalls. And last but not least, head on over to the Harmonic Trading Academy, where we do teach the advanced cipher pattern, the 3-bar reversal, everything pertaining to structure analysis, and much more. So that being said, make sure this one gets out there. Help us. We are on our run to 500 subscribers. That is all credit to you guys and people who are starting to become loyal to the channel. I think we're sitting at about 430 subs. Help us push that over the edge. You and I know that this channel should have way more than 500 subs. So we're at 430. Help us go ahead on this run to get it to 500. Appreciate you. We're going to be here doing this for a long time, and we're just getting started. So Harmonic Trading Academy playlist, Ultimate Trader Workshop playlist, Turning Point playlist. That being said, you guys will be good. Take care of yourself in the market, and I'll see you on the next video.